What's up, everybody? Hello, happy weekend. Hope you all are doing good. So we're going to get started with our SAG training, small account growth. Basically, how do we make money when we don't have a whole lot of money in the stock market? Uh, Now, before we get into anything, there's a couple of things that I got to say just to make sure everybody's kind of aware. One, I got to do a warning, strong language. I swear like a sailor. I try to keep things clean. But the honest truth is, I'd rather just use my natural lingo and make sure that you understand the concepts and the education that I'm giving you in this video than to try to watch what I'm saying. So if you are sensitive to strong language, which is perfectly fine and that's okay, but this might not be the video for you. It's definitely might not be the group for you in the Discord. When we trade, we swear a lot. When things are bad, when things are going red, you tend to vocalize it, right? When things are going green, you tend to vocalize it. So there's going to be strong language. There's strong language in this group. There's strong. We try to make sure that nothing's being offensive, but we do swear, and I probably will let one or two out in this video. Okay, the second thing I got to do is the disclaimer. Okay, this is for entertainment purposes only. Trade at your own risk. I'm not a financial advisor. I've never been educated as a financial advisor, and I'm not giving you financial advice. I'm not giving you any advice, right? Financial or otherwise. I am just showing you what I'm going to be doing for the next 60 trades. And if you follow along, I hope that you make a lot of good money. But there is a possibility that you can lose partial or all of your investment in the stock market. The stock market is very volatile. So if you lose money in the stock market following this strategy, it is not my fault. I am not liable. Okay. All right. So let's get into this. I am not an editing or a video master, any of that. So all of this is real choppy. Sorry that my production quality isn't there, but I'm a businessman. So follow along with me and we'll get this. So let's talk about concepts first. We kind of got to know what we're trying to do before we know how to set it up and actually do it. So pay attention. This is the training that we're doing in this video is ideally for people who have cash accounts of $100 to about $5,000. So if you're anywhere in this, this is definitely focused on you. However, it is okay to have a margin account at those rates, $100 to $5,000, and this will still work for you. You just need to understand that if you have a margin account less than $25,000, you are limited on your trades. You can only do 3 trades per week. So there's a way around it to still make the same amount of money that we're going to be working on with cash accounts. It's just you have to change it out a little bit. So it's okay if you have a margin account. And there's a way to trade to utilize this strategy. It's just going to be a little bit different than what we're doing with the cash account. We'll kind of get that. We'll explain that a little bit in detail in a second. The goal, okay, whether you've got $100 or whether you got $5,000 or somewhere in between, the goal is to take that account and grow it 1 to 2% daily. That doesn't seem like a lot when you look at it at face value, but it does add up. Okay. I've got a formula here that is really useful. This is what I use when I'm figuring out my goals when I was working up to a margin account, and actually more than. I didn't actually do a margin account until way after I had hit 25,000, just until I found the benefits of having a margin account above there was when I decided to make the conversion. But I'm going to be working with a cash account with you guys on this, a really small cash account too. I'm starting with $100. So how much can I make if my goal is 1 to 2%? If I'm only starting with $100? Well, this formula will tell you, since this is going to be a 60 trade day training, which is about 12 weeks, right? About 3 months. In 3 months, you can, at 2% per day, you can triple your money. Okay. So 100 times 1.02, right? 2% at 60 days compounding is $328. If you are averaging 2% every single day for a year, you can take $100 and turn it into about 10,000. Now that's assuming that you're right on 2% every single day, right? For the entire year. There's 260 to 261 trade days every single year. You're probably not going to be trading every single trade day. So I put it to about 235. That is a lot of money. $100 to $10,000 in 1 year is a huge amount of growth. There's no stockbroker on the planet that can give you that type of return. However, again, it has to do with consistency. Okay, you're going to take red days. Let me get that out of the way. There are going to be days when you take a loss. The less amount of losses you take, the closer you're going to be to hitting the high on the goal. Now, 1% isn't anything to shake a stick at either, though. You almost double your money in 3 months if it's at 1%, right? So 100 times 1.01 at 60-day compound is $181. So about 80, what is that, 81%? So about 81% in 3 months. In a year, you go from 100 to about 1,000. And again, that's still not anything to balk at, because this is not a get rich quick scheme. If you're looking for something to get rich quick, super duper fast, then I don't know, do multi-level marketing or some garbage like that. Okay. This is where we're taking money that we have and we're trying to make money the right way, which is slow and steady. Slow and steady wins the race. We are the hare. We're the tortoise. We're not the hare. So we got to make sure that we understand how much money we can really make. So that way we're not trying to overextend ourselves and end up costing us a lot of money or an even slower progression of building our account. So utilize this formula a lot. It will help you kind of understand what you're looking at 60 trade days down the road, 90 trade days down the road, a year down the road. If we were to just do 1% average per day at $100, 1 year is 1,000. But at 2 years, so then you take that 1,000, right? So I'm going to do some quick math on my calculator that you can't see, but 1,000 at 1% is $10,000. So if you were to not add any funds to your account and you were just doing it right off the trade, if you can at least get a minimum of 1%, you're going from $100 to $1,000 in the first year. So about 10 times the amount of money that that you start with. So 10,000 at 2 years, which means then at 3 years it's 100,000, which means at 4 years it's $1 million. Now, are you going to make $1 million off of this one specific strategy that I'm showing you over the next course of the next 60 trades? No. Once we hit certain amounts of money, we have to make adjustments, but the core concept of what I'm teaching you is the same. I trade exactly the same with $10,000 as you're going to trade with $100. We're just going to focus it and dial it in more specifically for those small amounts so that we can grow to a point where we can make those adjustments and really dial in the amount of money that we can make. But for now, this is the idea. We want a 1 to 2%. Are we going to shoot for over 2%? Absolutely not. Like I said, slow and steady wins the race, and we have to have self-control, and we definitely have to have control over our emotions. We do not want to be chasing a dream that'll end up crushing our account, okay? It happened to me yesterday. I was looking for a 4% gain on a specific stock, and literally 2 seconds later, the whole stock dumped 7%. And you caught holding a bag. It happens. So We shoot for 2% a day. We want at least 1%. Some days we might be red, some days we might be less, but if the average is in between there, we are good to go. And before you know it, you're going to have a pretty awesome stack in your account that you can trade with and make some really, really good money. Okay. Now, because we're using such little funds that we really can't do a whole lot with, we're only going to do one trade per day. Okay. I live in Utah. That means it's Mountain Standard Time. The open market begins, the first bell rings at 7:30 a.m. my time. 9:30 if you're in New York, 6:30 if you're in LA. So adjust accordingly. But you should be able to make that one trade within a half an hour, 95% of the time. Okay, we're basically going off of my watch list that I put together in the morning because they are the stocks that I believe are going to have the biggest opportunity to get you that one trade that you're going to make. You're going to go into the stock market at 7:30, and by 8 o'clock, you should be able to turn your laptop off and go about your day. Doesn't seem like a neat thing when we're starting with $100, because 2% of $100 is only $2, right? But what happens when you're into 1,000? Now you got $1,000, you're making $20 a day. Then you're at 10,000, and now you're making $200 a day. You get where I'm going with this? One trade per day. We're going to put the whole stack into it. Now, because you're working with a cash account, we have to split your account in half, because when you trade a cash account, you're not allowed to use that money to trade again for 2 days. It has to settle. It has something to do with them taking it from the bank into the stock account and then back into the bank. The way that, math and finance and all that stuff. But the one thing we need to know is, if whatever we trade on Monday, we can't use that money to trade again until Wednesday. And then once we use it on Wednesday, we can't use it to trade again until Friday. If what we use on Tuesday, you can't use again until Thursday. So we have to cut that stack in half. So if we have $100, that means we're going to trade $50 a day. If we have $500, we're going to trade $250 per day. Following along with that? So if we're only using half of our stack each day, in order to get the 1 to 2% daily account growth, which is our goal, that means that one trade has to be 2 to 4%, right? Because we're only using half our stack. So half of our stack at 4% is the entire stack at 2%. And that's where we get the 2% daily. If we get a 2% on that stack, half a stack that we're trading on that day, then that means that our entire stack got a 1% growth. Okay? Hope you're following on, because it's really important to kind of understand that concept. Again, it's so we're not chasing something that's not there. We want to know exactly what we're doing and how to do it so that we can stick to the goal. I can't stress it enough. You're going to hear it in all of these videos about sticking to the goal. Don't chase. And we need to know all of this so we know exactly what we're trying to get. So if we're at $100 and we got $50 per day to trade with, then that means that at 4%, we're looking for a $2 gain. Once we hit that $2, we're done for the day. Enjoy your day, whether it's going to work, playing with your kids, going to the gym, or whatever. I love this idea of only working a short amount of time so that I can spend time with my family, so that I can spend time working on hobbies, so I can spend time going to the gym, so I can spend time learning how to cook because I'm a terrible cook, or whatever you want to do. But you can grow your account to a significant size in a relatively short amount of time if you follow your goals and you follow a pretty decent strategy, which I feel like I have. Now, if you have a margin at less than $25,000, that means you can only trade 3 times, which means that you need to actually throw your full stack at a trade and only trade every other day. Because if you go over that 3 trades a day at less than 25,000 in a margin account, you can be penalized. They can restrict your trading for months. Like 90-day suspensions, things like that. We don't want that. So if you are in a margin, that's okay. This will still work. You can only do 3-day trades a week until you're at 25,000. So all you're going to do is just throw your full stack on Monday, then wait Wednesday, and then do it on Friday. Then the next week, do it Tuesday and Thursday. Or basically repeat if you're on a margin, because you don't have to worry about settling. But if you want, you can take your cash account and you can throw your full stack on Monday, get your 2%, or I'm sorry, get your 4%, right? Because it's the one day, and then wait until Wednesday, throw your whole stack at it, get your 4%, then do it again on Friday. Now, you won't have anything on Monday because it takes 2 business days to settle. So the next trade day that you'll be able to do with a cash account is Tuesday. Then you do it on Thursday. It's all going to average out the same because you're trading a full stack every other day at 4%, where everybody else is trading half, or at 4%, where everybody else is trading half their stack every day at 4%. But the percentages stay the same, right? So you can do one or the other and still maintain your goal. I want to take advantage of the stock market every single day that I can, but it all depends on your schedules as well. So I cut it in half. I don't throw the whole stack at it when I'm in a cash account. Okay, so just a quick review. We understand this concept. 1 trade per day. We throw the farm at it, or we throw half the farm at it, whatever you want. On that trade, you are looking for a 2 to 4% gain. And when we trade live on our Discord, and when we do the homework videos every day, I'm going to teach you how to know if that stock should be taken at a 2%, or if we should wait to try to hit 4%, or if we need to clear somewhere in between. You have to learn this. A lot of this stuff is intuition. So a lot of this you're going to learn as you continually trade day after day after day. And then you're going to be able to see the signals in your chart and in your indicators that say, oh, even though I'm not at a 4%, I'm only at 3% or 3.2%. I need to get out of this, and you execute your exit strategy. But that comes with experience. That's why I definitely encourage you to get into the Discord with our Rip City voice channel, so that you can see us trading. We actually call out the trades we make. We call out the enters. We call out the exits. We call out the things we did good. We call out the mistakes. Best way to learn is to learn with people that do this full time. And there are a few full-time traders in that audio room, or in that voice channel. So I definitely recommend that. We also do it on the chat part as well, people talking about going in and going out. I want to make sure that I'm fully transparent with this. This is how I was able to increase a stack and basically quit working 9 to 5. Now, I'm not saying that that's what you should do, but what I am saying is you can make money in this if you follow good basic tenets. Now, we need to, in order to be able to do this right, we got to make sure that our tools are set up the right way. So I'm going to talk about what your chart should look like when you're following this strategy. Okay, so this is basically a chart. I use TD Ameritrade's Thinkorswim platform. I know a lot of y'all are on Webull. It's all pretty much the same. We'll talk about small differences that I know about. I don't trade Webull, so I don't exactly know the entire platform. My buddy Garrett, who is an amazing day trader, has a great setup on Webull. Feel free to reach out to him on the Facebook or Discord. And he can kind of show you maybe somewhat the setups look like. Just be respectful of of time. I would say if you have any questions about any of this, put it in the Facebook or in the comments, just so that we can get to it when we have time. Okay, so this is what my chart looks like. It's actually pretty simple. If you've never really seen the charts, it might look complicated. I know a lot of people put a lot of different indicators and studies on, and they look super Star Trek-y. This is a very simple setup because it's a very simple trade strategy. So we're going to talk about all the things on here that you need to have in order to be able to utilize this strategy effectively. Now, the first thing that we need to talk about is Heikin Ashi. Heikin Ashi is the appearance of these candles right here, the green and the red candles, and the way that they move. Okay, don't use a candle setup. It's way too complicated. We trade very, very fast. And so looking at a regular candle setup where it's got wicks going out the side and the top and the bottom, and too much to look at, because we're not into it long term, so that information isn't really that necessary. We do want Heikin Ashi though, because we don't want lines. We want to be able to see each interval and exactly how it fluctuated with the stock. A line looks like this. This is usually what the original setup looks like before you change. This is a line here that's basically telling you where the stock is going. I have no idea how to read this effectively. It's garbage. We do not want lines, okay? We want candles. See the wicks going up, see the wicks going down. It's a very simple concept. So the first appearance that we need to make sure we have is a Heikin Ashi chart appearance. Okay, Heikin Ashi. The next is our intervals. Okay, we trade extremely fast, so we want 1 minute intervals. Now, when I'm talking about extremely fast, see, that's where mine shows that I'm at a 1 minute interval. There's a lot of different intervals. There's 5 minute intervals if you want to trade longer. There's 15-minute intervals. There's 4 hours. There's 1 day intervals. It just depends on how you trade. 1 minute intervals is how this strategy is effective. There are a couple of people in our group that use 5 minute intervals. If you feel like you want to be able to get bigger rips and long, reach out to them if you know who they are and see how they adjust their strategies and styles to make it work. This strategy that I'm teaching you now will not work on a 5 minute interval. We want quick rips and out the door. I don't want to be in position for an hour. I feel like I'm just wasting time. I get bored real quickly. I have attention deficit. I've never been diagnosed, but I definitely can't focus on too many things for too long of a time at once. You get that system overload. I used to work in a call center. You stare at a screen all day. It makes you want to rip your hair out. I don't want to stare at a screen all day. So when I developed this strategy, I made it quick. You're going to be in position probably averaging about 14, 15 seconds, if that, sometimes even quicker. I've done 3-4 second trades and made a lot of money doing it. So 1 minute intervals is necessary in order for this strategy that I'm giving you to be the most effective. So after one more, we need to make sure that we have our indicators set up, right? Our studies. We need SMA lines, okay? The orange SMA line right here, this is the 50 SMA. What that tells you is how the stock's trending over the course of 50 days. And as this goes up and down, it also adjusts. The next one that we have is also the 9 SMA. I guess I got those backwards, but it doesn't matter. We want the 9 SMA. The 9 SMA is telling us how the stock is trending over the course of 9 days. That's why it's a lot closer to the averages on our candles on each interval. It's closer to the actual price points, is because it's only averaging to the 9. We want these here so that we can see how well the stock is trending. Now, absolutely not 100% necessary for the one trade, but as you start to utilize these and start to learn to trade a little longer and have more trades, you're going to want to see them because they're going to determine if it's a good trade or not. Next indicator is the RRI. This is called the Relative Range Index. It is set at a 6 day. Okay. See the 6 right there? That tells us what the setting is. The Relative Range Index basically just conceptualizes the idea of how many buyers to how many sellers in the ratio of how many shares are being bought, how many shares are being sold. So if I have mine set at a 50 and a negative 50, so this is negative 50, this is 50. These bottom and top lines. Negative 50 and 50. The marginal is at a 0. What that represents is if we're above this 50, the stock is extremely overbought. That means there are way more buyers than there are sellers. That usually indicates that the stock is heading up. Okay. If it's below, then that means there are way more sellers than there are buyers, and the stock is generally going down. We need to know that. You'll learn why in a little bit later in this video. The next indicator that we need to have is our MACD. Our MACD is set at a 12.26.9. A lot of different things. If you really want to know what the MACD is, read about it. Okay, it's actually a pretty complex system of how they figure out these weighted averages. But you've got a couple of different lines here. See how they cross? That tells us a huge story with what we think the stock is going to do. And then you have the histogram with the red below and the green above. We want all of these indicators on our screens so that we know these are what's going to tell us when to buy and when to sell. So make sure that you have these on here. And shout out to Ken Barber for letting us know about the MACD. It really does help. He's an amazing dude. We have such great people in this group. I really want this group to just be people learning and helping each other make money. Too many people just out there for themselves. I used to be one of them. I'm not anymore. It gives me a lot of pleasure to see you guys making a crap ton of money, having great trades. I want this to be a community group where all we're doing is just helping each other out, because I really feel like that's the best. If I wasn't willing to help somebody else out with the strategies that I had, I never would have learned new ways to adjust my strategies from other people that gave me their insight. That's the great thing about strategies and styles, is they're always evolving based on the information that you have. You guys will probably be able to find a better strategy than the one I'm giving you now, because you're going to find your styles and you're going to find new information and how to utilize that information. I'm kind of giving you the most very basic blueprint, and then as you guys trade, you're going to start to learn what you want to do. Now, so to review, Heikin-Ashi, 1 minute intervals. We need a 9 SMA. We need a 50 SMA. We have RSI set at 6, MACD at 12.26.9. And once we have all of that on our screen, we are ready to trade. We're ready to kind of get down to it. So let's talk about a typical buying and selling example and circumstance, so you know what to expect when you get on the Discord and you see what we're looking at, or even if you want to do it yourself because you don't have time to get on the Discord. But I'm telling you, if you have time to trade with us in the morning, get on the Discord. Okay. The That's why it's called morning market movers. The morning is the absolute best time to trade. It's where you have the most volume. It's where you have the most volatility. You have the biggest swings. This is support from yesterday. This is about a 10 to 12% swing. Can you get a 4% rip on that? Absolutely. You usually do not have big swings like that later in the day. So the concepts that I'm giving you still work later in the day, but you may have to adjust your goal a little bit. You might not be able to get that 4% rip. You may have to settle for a 2%. You may have to settle for 3%. You may have to settle for a 1%. And you may even have to settle for a 0.5%. As the day goes by, less volume means less volatility, which means less opportunities to gain bigger percentages. The last hour of the market, which is called power hour, which is from 1 p.m. to 2 p.m. my time, Mountain, that volume tends to pick up real good. Everybody's kind of consolidating their trades before the end of the day. You can get a little bit bigger rips. And we are also on the Discord chat for that as well. So a lot of great things to help you out, a lot of tools, a lot of support, a lot of resources. Please use them, reach out. Like I said, we all just want to get along, share ideas and information so that we can make money. Okay, so let's talk about that. In the morning, about an hour before the market opens, I shoot out on the Facebook page, on the group page, as well as in the Discord, a watch list of the 4 stocks that, based on volume, pre-market movement, fundamental indications, and just a lot of things. Those 4, I believe, have the best or some of the best opportunities to get your rip. And we only need one of them. We just look at whichever one has all the indicators set up perfectly first, and that's where we're going to buy in and take that rip, get out, close our laptop, and go on with the day. So if we look at support, this is a really good example because it was really hot the first half hour of the market. This was on my watch list an hour before the market opened. We're looking at it along with 4 others. The market opens. There's a green candle. Do we buy? No, we do not. We are professionals. We have to look. A green candle doesn't always mean that we're going to get what we want. One, the green candle might only last. It might only stay green for 1 minute. You might not make any money. Or it's just not going to go high enough that you're going to be able to hit your goal. Then you're going to wait for your goal and it tanks. So a green candle is not an indicator. In fact, the green candle doesn't really mean nothing other than just telling us what's going on with the price. But if we add the other indicators along with that green candle, that will tell us whether or not we're going to trade with it. So what we like to see in order to make sure that this is going to be a position we want to enter, meaning this is when we want to buy the stock. When we look at the price action, so you got your prices over here on the right, that tells you, how much the stock is at. You also have it up top as well, the price action. But you got your prices out here, you got your grid going on. We want to make sure that if we're trading, the first thing that I like to see is how close is it to the 50 and how close is it to the 9. I really, really, really like to trade when the price action is as close to those 2 indicators or above as possible. Now, that doesn't mean that it's not a good rip. It's just that I don't want to take the chance. So I want to make sure that both the 9 and the 50 are within a couple of points of the candle, of the price point, of where the stock is actually sitting. It's support. It gives me some extra confidence that if the stock isn't way down here where the 50 is way up here, it gives me confidence to know that I'm going to get a better rip out of it. So we want to make sure that we're within a stone throws of both the 50 and the 9. If the 50 is way up, if the 50 is way up here and the 9 is kind of up here, I don't want to trade it, because that means it's trading below the trend. That means that it's kind of at a loss. It's in a longer, if you start looking at like 15-minute intervals, or you start looking at the whole day, or you start looking at the whole week, it means that it's trending down. Well, if it's trending down, then it's probably not going to go up very much for us when we actually do get a green candle. So we want to make sure we're within a stone's throw here. It can be below, it just can't be way below. Okay. We get a green candle, we start looking, okay, so it's within, it's within a stone's throw of our indicators here. Then what we do is we go and we look at the relative range index, and what we're looking for is an oversold position. My old strategy, which is actually in the announcements tab, which I may take down, which I'm going to, but it actually makes it easy. But that had us buying right here. I'm now having us buy here. The reason being is we want to make sure that we have enough support that we know which direction the stock is going, right? So we want an oversold. We actually want an oversold environment, completely opposite of the way that I used to trade. I used to grind it out right here and just piece 1 and 2% rips and be absolutely happy with it. But we have indicators now that will tell us that these stocks can go beyond just a 1% rip. So we want to make sure that we are in an oversold, because that means we have a lot of support. That means everybody's buying, which means the stock is going to go up. So we want to make sure that it's in a oversold position, or it's really darn close so that it will get to an oversold position. So if we have a green candle and it's within a stone's throw of the 50 and the 9, and we're in an oversold position, the next indicator to buy is with our MACD. Now, we want this bad boy right here. We want intersecting lines. Ken Barber and Garrett Burns call it the golden cross. We have to have that. If this hasn't crossed, that means we don't get a green pop on the histogram, which means that we are not ready to trade. We're going to let that go. Doesn't matter if we have every other indicator. If we don't have this MACD cross and the histogram going above into the green, we do not trade. We have to have a cross. We have to have a green bar, and we have to have an oversold environment. We're not looking for just 1 or 2 or even 75% of these indicators. We want all 3. We want the chart, we want the oversold environment, and we want the golden cross. That is the trifecta of a solid entrance. This is when I'm entering in. This is when I'm buying a stock, is right here. And if that means I'm buying that stock right there, that means I'm buying this particular stock right around the 975, 978, and I'm waiting until it gets its 4%. Once I'm at 4%, I am selling. How do I know it's at 4%? Well, keep a calculator with you. If you bought in at 975, what's 9.75 plus 4%? That's what you're looking for. So at 4%, whatever it is, let's say 4% is right here. Now, I don't know if it is or not, but let's say 4% is right here at 10.25. That means we're selling at 10.25. We are not waiting for it to go up. We are selling at 4%. One of the most important, in fact, let me rephrase that. The most important thing that you can do is have an effective exit strategy. Most people get into a stock relatively pretty safe, but they don't have an exit strategy, or they ignore the exit strategy. Our exit strategy is at 4%, period. Our emergency exit strategy is before 4%, depending on what's going on with the stock at any given point in time. Sometimes we have to get out before then, but we are not chasing. If it goes up after we sell, neat, thumbs up. We don't feel bad that we missed that rip. We have to take emotion out, and we have to be able to send it at our goal, because consistency is the key. What if you're like, I want to do 1 more percent and it goes to 5? Then you're like, well, hey, if it goes to 5, it goes to 6. Well, it goes to 5.5, and then the very next interval it dumps 4%. Now you're taking a 1% gain where you could have taken a 4, or heaven forbid, it goes way down and now you're in the red. Now you sell and you've lost money. We don't want that. We want green every single day. And the only way we do that is consistently, which means that once we hit 4%, we consistently get the hell out of that stock. The longer we're in a stock, the more chance we have of losing money. That's just the way it is. You know, that it's like gambling, right? The house has all the odds. So at any given time, you might win, but the chances are the more you play, the more you're going to give out. Same thing with stocks. The longer you're in a stock, the higher the risk goes. We're going to average, honest truth, we're probably going to average about 10 seconds, 10 to 14 seconds being in a stock to get the 4%. It might actually be longer. It might be 3 minutes, but we know if we need to take out, if we need to exit based on what's going on. And you're going to learn that as we do the videos. But once we hit 4%, we're out. We do not chase. We stay consistent. We are professionals. So once you hit that 4%, you exit. That is the strategy. After that, you close your you record it in your tracker, you close your laptop. Speaking of which, you need tracker. Even something as simple as this. So many people use a lot of different trackers. Some of them are complicated, some are not. But you need to know how much money you've made each day. Especially if you're throwing money that you've made in other financial things like a job or whatnot. If you're throwing them into the account, you need to know that you're actually making money and not just, and your account's not just going up because you're throwing outside money at it. So you need to track how much you're making on a daily basis, average it out, and make sure that the average is going up. We want to know what our average is, so that way we have an idea of how much money we're going to make in 60 days based on our average, in a year based on our average. That way we kind of know. We have goals, we have ways, but you got to know what you're making. It's really simple. The honest truth of it is I don't think it could get more simple. Just because it's simple doesn't mean it doesn't work. In fact, I really, really like to try to keep things as absolute simple as I can. The whole reason that I wanted a day trading real quick strategy was because I didn't want to deal with flags and trends and patterns and all this. I just wanted something that said, hey, buy now, sell now. And doing 1 minute quick intervals and just getting in and getting out, 10 seconds to 2-3 minutes is the best way to do it. So that is my strategy. In a nutshell, that is what we're going to be doing. Now, I am going to be trading with you guys. If you get on the Rip City, I'm going to tell you what I trade with my one trade. I am only going to trade once. I am going to utilize $100 as an example. And you're going to see how fast I can make $100 grow. And if you're following along and you're looking at things and you're buying and selling with us, you're probably going to get there too. If you have any questions, please put them in the comments section or ask a question, post your question in the Facebook group. please do not direct message me. I will not answer. I get probably 40 to 50 of these a day, and I just don't really have time to go through my messenger and all that kind of stuff. Plus, if you have a question, everybody else probably has the same question, and it's easier to just answer it in a forum setting. So please, on Facebook or on Discord, ask the questions there, and myself, Garrett, any of our other expert traders will answer them for you as quick as possible. Otherwise, I will see you Monday morning. I will be on 30 minutes before the bell opens. That's 7 o'clock Mountain Standard Time. That's 9 o'clock Eastern Standard. That's 8 o'clock Central. And that is 6 o'clock if you're on the West Coast, to help answer questions. And you will be trading with me. Okay? All right. We will talk to you guys later. I hope you found this very useful.